Hi, in this whiteboard session, I'm going to be sharing with you how actually I work with a client who's in the IT space. My client owns an IT consulting company and he does subcontract work in the government space. Let's go over some of the details of my client, okay? So my client runs an IT business and his income last year was about $750K. Okay? My client, it's married, and it's got 2 daughters. Okay? So, also my client has been so smart over the last few years that with the excess of his cash flows, he actually has invested in real estate. Okay? So that's very smart. So he's got real estate, and the cost of the real estate that he has accumulated so far is roughly $600,000. Okay? Also, in terms of assets, before my client started his IT business, he used to work for a number of companies. And when you're working for a number of companies, especially in the IT space, in the government space, you get 401ks, right? So over the years, he accumulated a number of 401k accounts, retirement accounts, and he has roughly 6 accounts with an accumulated value of $250K. Okay? And as I said, my client is in the DC area. A lot of the government space business, consulting businesses are based in the DC area. Okay? It's very smart for them to be very close to the nation's capital. So when I got into the conversation with my client, one of the main questions I asked, how can I help you? Right? I see that you have been so successful. You have real estate, you have a nice business, you have retirement accounts, and I would like to know how is it that I can help you, right? Like, what are some of your goals? Where is it that you want to go? What's your destination? It's important for me to understand this because by me understanding the background of where the client current is, then we can work together on the path moving forward. And he shared with me, well, Victor, some of my goals are pretty straightforward. The number one thing I want to do, he said, is I want to organize my 401k accounts. I would like to know, he says, what is the most efficient way for me to do that, right? Remember that he's running a business, and as you see, he's got a number of 401k accounts and he would like to organize those. And I said, okay, I understand that. You have a business, you have real estate, and you would like to organize your 401k accounts. I get that. How else can I help you? I asked him. And he shared with me that this year, his business is going to be going from $750K to 1.2. I asked him, so that's a $500,000 jump or so, $700,000 jump or so. What's going on? What's happening that your business is scaling so fast? So as I shared with you, he's in the IT space and he's in the DC area and he's a subcontractor. But then this year, he's restructuring the way he's operating, right? He's going to be going after federal contracts as a prime contractor. So when you go as a prime contractor, then the level of income can go up. So in this case, he's projecting that his income is actually going to go up from 750 to 1.2. And he would like to make sure that he's not overpaying taxes. Like he wants to make sure that he's not overpaying taxes, right? That's another goal. And I said, okay, perfect, I understand. How else can I help you? What is the promised land? And he thinks forward, right? As you see here, he's got real estate that he has accumulated, and he wants to buy more real estate, right? So he said, I want to buy about million plus in real estate if I can, if I'm able to swing it. And I said, great, perfect. So you have a business that's throwing cash flows, right? And you want to put more money into real estate as you have done in the past, right? And he goes like, absolutely. And I said, perfect, I understand that. So as you see, so far, he wants to make sure that he wants to organize his 401k accounts, he doesn't want to overpay taxes, and he wants to buy real estate. In addition, he shared with me, he wants to buy an SUV through the business. He goes like, well, Victor, my business is growing, and I want to make sure that I want to reward myself and I want to reward business by having a new asset. In this case, he wants to buy a nice SUV, and he'll like to know how to go about it through the business, right? This is a promised land for my client this year because his income is going to be going up significantly. And here's the game plan that we actually put together for the client, okay? So what we've done is the following. So he owns an S Corp, right? That's the main business in which he's operating through, an S Corp. And through the S Corp, we're going to make sure that he buys a qualified SUV, right? His budget for the SUV is about $150. It's a nice decked out SUV, right? And he wants to make sure that he qualifies for Section 179 of the Internal Revenue Code. By doing that, automatically he'll approximately be saving roughly $45,000 on federal income tax just by doing this move, right? But remember that he also has a partnership that invests in real estate. Remember that he already has some real estate holdings. So the way he's going to go about it is, you know what, with this tax savings, I can actually have additional down payment capacity with my excess cash flows and put a down payment on this real estate purchase, right? You are utilizing, you're engineering tax reductions in addition to excess cash flows for you to buy more assets. Okay, you're reducing your taxes, so you have more cash flows, right? You have more earnings accumulated in excess of cash flows. You combine the two, and then you have more purchase capacity for you to buy more real estate. Remember that he's operating a business that's cash flowing. That is the main driver of the business. Now, he's taking some of that excess cash flows along with the tax savings and buying this real estate $1 million plus because this is one of the goals that he has. This is part of the promised land for him. And remember that when you buy real estate, you have the beautiful trifecta. We have spoken about this in the past. We have appreciation, we have cash flows, right? And then we have, of course, write-offs that comes mainly through depreciation. And this beautiful depreciation is going to be coming across a cost-seg study. We estimated that by operating the new purchase of real estate, having the right cost-seg in place, and operating the business as a real estate business along with the other write-offs, closing cost, interest expense, utilities, repairs, etc., for those savings to be north of 100K for that specific year, first year. And remember that when you're doing cost seg, you are depreciating the property in different useful life buckets. We've spoken about this in the past. So in essence, he's depreciating the property faster and more aggressively in the initial years. So recapping so far, we have about $45,000 in tax savings from the purchase of the SUV and north of $100,000 in tax savings by the purchase of real estate through the partnership, through the business. Okay, so close to $150,000 only with these two moves that are part of his goals. Remember, these are things that he wants, things that he needs in order for him to keep on evolving in the business, in order for him to grow. We're not making anything up. This is part of his goals. What we're looking into is, with the current setup, how we leverage the tools available in order for him to achieve the goals. We call that the promised land. How do we get there? Okay? Beautiful. And remember that he's got a couple of kids, 2 daughters. Okay, so the business can hire them. Let's say that he will hire the 2 of them at a $10K per year to each kid, right? That's $20,000 in salaries. And remember that this is an expense for the business, but it's tax-free for the daughters. And then they can take this money and put it on IRAs to fund college. Or they can become an investor in the partnership. It's multiple things that they can do with this, setup on salary. Or they can go ahead and play with the money, right? If that is what they want. But my client is very savvy. I'm sure he wants to teach his daughters how to utilize money and how to create wealth, right? And then the following is that he wants to organize the 401k accounts, right? This is lingering from his prior life when he was an employee. Employer 1, Employer 2, Employer 3. So the recommendation is, let's roll over each account into an IRA. And the rollover is tax-free. Right? So he's going to, in essence, take all these $250,000 in deposit that he's got with the prior employers, prior plans, and put it in a new one in which he's going to have control over, right? He's going to be actually having control over it. He's going to put it on a new account. It's going to be tax-free. And the beauty of it, at 59.5, he can start pulling money out without penalty. That is key. So the beautiful trifecta here is, remember that my client is a business owner. So he's generating cash flows. Then he's actually, by moving the cash flows of the business and the tax savings that he has accumulated so far with our plan, he's actually multiplying it through real estate. And then once he multiplies it through real estate, he actually gets to preserve it for the long term through retirement accounts. So number 1, he's creating cash flows. 2, he's multiplying it through real estate, and then he's preserving it through retirement accounts, right? Those are his goals. And we accomplish the 3 goals with tax planning. That's the beauty of it. As you guys do see, we were able to put together a nice plan for our client in which we were able to accomplish his goals. If you would like to book a consultation with me or an advisory session with my team, click the link below. Again, my name is Victor Delerme, and I'll see you on the next one.